If you're anything like me, you are a complete and utter idiot. You're a stupid person. You're not intelligent. You're just average, just like me. And you want to make money trading. Okay. Now, I can't guarantee you anything, but I'm going to show you what works for me. Using a super, super simple approach that simply just controls risk as well to make money. This is how I do it. I don't know what the hell is going to work for you, but you can maybe take what I'm doing and find some value in it. So let's say we start a $10,000 account. And let's say we barely have an idea what we're doing. We're using just mainly support and resistance. We're using nothing else. No fancy indicators, no ridiculous smart money, order block, liquidity flow, institutional bank manipulation strategies. We're just some dudes looking at the chart thinking it's going to go up or down. Support and resistance works fine. Let's pick a random pair here. Let's type some random stuff here into the Google calculator. Then we'll hit enter, and then we'll use the last number. So 6. So let's do number 6. So 1, 2, 3, 4, 5, 6. So Euro GBP, and we will go to an FXCM chart. That way I don't mess up my layout here. And we'll just scroll somewhere random here back, and then we'll hit the replay button. Boom. All right. So what are we gonna do? We're gonna wait for price to get to a support zone, and we're gonna buy, or we're gonna wait for price to get to a resistance zone, and we're gonna sell. That is literally it. Remember, we're average level intelligence. Okay, we're not that smart. We're just your average Joe trying to make some money trading. So first off, we need to draw some clear support resistance zones. You don't need to draw a million zones. Just draw one zone below price. Draw one zone above price. This is kind of tricky because it could be any of these. Let's just use the most recent one, which is right here. All these highs clustered up in here. It looks like that. So what I'll do is, if we do get a setup, then I'll show you how the risk is structured and what the plan is for managing it, whether it goes into profit or loss, and then we'll wait. So pretty much going to sell if it gets to resistance, or we're going to buy if it gets to support. So it came into support, so we buy as soon as it gets to support, just like I said. Came nice here. Usually I'll buy about in the midway of the zone, like midway through. You don't want to try to get the entry at the very low or at the very beginning. You just, like, midway through the zone usually works fine. All right, so now what's the plan? So we need a risk structured. What I use hedging. I don't use stop losses typically. Every now and then I'll put like maybe a stop or maybe a break-even stop on something, but I use hedging because it allows me to roll out of most positions in either a net profit or a break-even. So it's like I don't really take a loss very often. So hedging just seems to work better for me. But you do whatever the hell you want. This is just me. Remember, I'm a complete idiot. This is not financial advice. I'm just your average Joe, just trying to make a buck trading, right? I've been doing this for 7 years this way. So this will be, let's say we start like a 10K account. You should not start with all your money. Let's just start a $1,000 account. Let's just try to double it. And let's do high risk, right? You shouldn't put all of your money into one account, because with FX you have super high leverage. So you don't need to put like $100,000 into an account to trade a one standard lot. Don't be an idiot. Just put like 1K into an account. Use a high leverage, unregulated, degenerate broker, not financial advice, and then just grow the account. Just risk, a decent amount per trade to grow the account. Because at the end of the day, if you're risking like 20% of this, for example, it's like $200. If you've got 10K to trade with, and if you put 1K into an account, and you only risk $200 per trade, yeah, it's 20% of the account. Oh my god! But like it's $200, so it's not that much, relatively. If you only have $1,000 to trade with, maybe start a $100 account and do this. I don't know. So we're going to risk 20% per trade, and we're going to try to make pretty much just like a 1-to-1 risk reward ratio. And if not, some cases more. So here's what we'll do. If price breaks this zone, we will hedge the position for one. So this will get hedged, meaning it'll enter a sell position, and it'll be locked in at around $200 loss. And for profits, let's just say we think price will come up to here, and if it does, we'll close the buy somewhere just before the zone, and then we'll look to get into a sell. All right, so it gets up into the zone, and we can close the buy up here. So in this case, the risk on this was $200 of risk for about 30 pips. How much pips of profit? About 60, so that's about double. So we risked $200 on this to make $400. So we'll just add $400 here. And what do? We bought at a support zone. Okay. Now, of course, we're going to try to be wrong here at least once or twice. That way I can show you guys what to do, how to roll out of positions that don't work. But we drew a clear support zone where price had just bounced multiple times in the past. And we just bought as soon as price got there. We didn't even wait for any rejection, candlestick pattern, institutional candle with order block, liquidity flow, nothing. None of that shit. We just bought as support. So now let's go ahead and flip into sells. And we'll risk 200 bucks. We'll sell right here. Where are we going to put in fact, let me show you guys how I would manage this right here. The next zone looks like it's like right here, potentially. Let's go see. Yeah, this is a lot of crap right here. But the next zone is right here. So instead, let's put our invalidation like all the way up here. We'll still risk 200 bucks. But what we will do is we will look to add a sell position if price comes into here. So if it goes down to the next support, cool, we'll make a profit, probably be about 200 bucks because this is a pretty big invalidation zone. So you would use a lot size where this 71 pip risk, this would be equivalent to $200 of risk on your $1,400 account. And if it goes into profit, we're not going to make as much, because the invalidation's so big. Invalidation zone is where you put your stop loss or your pending hedge order. It's just a location where your trading idea becomes invalid, where it's no longer going to work out the way you thought it would. So, yeah, and then we'll add if it comes up here. So the two outcomes, right, for now, come up here, and then maybe it'll bounce there. Or it could just continue down from right here and we'll make profit. Either way, we have a plan. And this invalidation up here, if we get this second entry, we'll be in the same spot. Just like, they'll both be up here. And this will be a $200 risk as well. Let's play it out and see what happens. Okay, so it comes down here to support. So we can close. And let's see how much profit this was. So this is 200 bucks for 73 pips of risk. And it came down here for like 64 pips. So let's just say this is like 180 bucks. So a little bit less than a 1-to-1. And that's okay because it was still a profitable trade. The risk was controlled and there was still a plan. 180 bucks. And what did we do? We literally just sold at a resistance zone. We just sold at resistance with a plan and with risk structured appropriately. It's not rocket science and it's not complicated. So we can take off all this trash here in the chart and we will just buy. Since it's at support again, we'll buy. And if we're wrong, we'll just get hedged and it'll just wait for the next trade. So we'll put our hedge order just below this zone. And we need to see where the next zone is at. So the next zone is right here. So what that means is that if we get into a hedge and if price breaks this zone, which it looks like it might because it looks like things are going down. But again, remember, we're not that smart. We're just the average Joes. Okay, we're not factoring in trend analysis and fundamental analysis and all this trash. We are your average Joe just looking at the support and resistance zones, being complete idiots. And we're still going to make money. Doing less than everyone else. All your friends will get frustrated at you. They'll look at you and think like, he's a complete idiot. How is he making money trading? Probably because you're just keeping things simple and controlling risk. Something I've been saying for like the past 7 years. It's all you need to do. And if we're right, I guess we'll just close, somewhere up here. Maybe at like a lower high since it looks like price is kind of coming down. But, we'll see. We'll see how it factors out. Let's just get this straight. All right, so this is a $200 risk. The invalidation is right here. And then we will look to, if it breaks, we will look to buy down here. And we'll close this sell and profit if that happens. And then we'll have a new invalidation zone just below this low. At the invalidations, you can put stop loss orders. You can put pending hedge orders like sell stops. You can control risk however you want. Like I said, I just use hedging. And it's just so much easier for me. Because you make a profit almost every single time, or you break even. Maybe like half the time you make a profit, half the time you break even. Because I'm right like maybe half the time. And even though I'm right half the time, I still make money trading. Isn't that crazy? It breaks all the rules of what everyone thinks trading has been. So let's play it out. So it looks like it's going to break downwards. So it does. And then we get hedged. So now, check it out. Prices come back up to this zone. So here's what we can do. Since it's at this zone again, and we now have a new trading opportunity, usually when price breaks the support level and comes back to test, about half the time it'll bounce and it'll go down. So what we can do here is we can close this position here at break even. This will technically be a small loss, but we'll just close it there around break even, small loss. And then what we can do is we can put a pending hedge order just above the zone right here. Now what this does is this increases our risk from the current $200 that it's at right now, and it increases it to now about $400 because it's about double the distance. So we're now at a $400 potential exposure here. But if price bounces downwards from here, then we will make profit on this position. That would be cool. So let's see what happens. We think it's going to go down. It's going to go down. We have a plan for if it goes wrong with a hedge order, and then we just let it play out. So it hits the pending hedge order, and then it comes down. Then it slashes through this zone. So this zone looks like it's not really being respected anymore. Let's just leave it the hell alone. Wait for it to get to something more clear. Sweet. So it comes up here to the next resistance zone, and it looks like it just smashes through that outright. And then so we finally get a fresh test of our new resistance zone up here. So since the candles just spiked through it like crazy, let's go ahead and not use this zone anymore. Instead, we'll use this zone. Let's go ahead and thicken it up above that high right there, just in case it spikes all the way up there. So now, what are we looking at here? Let's go ahead and let's simplify everything. We're sitting in a $400 drawdown on our, it was like a $1,600 account. We're trying to figure out how to roll out of this position. So what we can do here is we can close this position here in profit. And then what we can do is we can add a sell. So we have to keep something in mind here. If we're closing this in profit up here, this distance from here to here, this is a $400 of risk. So this right here is $400 of profit. But this right here is going to be in like a huge drawdown, right? It's going to be like in a whatever drawdown, the $800 drawdown, $1,000 drawdown, whatever it is. So we need this to bounce and come back halfway to make a profit on this. And for this, we'll put the new invalidation zone just above here. So we're risking a lot on here. Keep in mind, if you're starting a small account, as long as you know your metrics and you know you're going to win like 90% of the time, you'll come out at break even or profit, then it doesn't matter. So we've booked a $400 profit, and then we're just simply selling at the next resistance zone. It could not be more painfully simple than this, to buy at support and sell at resistance, which is all I really do. Of course, I use my experience to help guide me, and if it's a zone I don't think price is going to bounce at, sometimes I won't enter or this and that. So there's experience that comes in, don't get me wrong, but it's still the same simple structured system of just like support and resistance. That's all you need. So let's enter a sell here, and this will be the same lot size as this down here. And this up here would be a $400 risk for this new sell position if it invalidates. And we will have to have another pending hedge up here so that we can hedge that first position again if it breaks this zone. So let's see what happens. So it pushes deep into the zone and it pulls back. What we're trying to do is we're trying to get out of these at break even. So if these can come about halfway to each other, then we can get out of these around break even. The halfway mark is kind of like right in here. I mean, let's see. That's 65 pips. This is 54 pips. So a little bit lower. So the halfway point is probably like, somewhere like right here. So if it gets to right there, we'll close both of these sell positions. And since they're equal lot sizes, that means this sell will profit and this sell will lose, and it will be the exact same. Because we'll have a profitable sell for, whatever, $400, and we'll have a losing sell for $400 negative. They'll equal out to break even, and then it would mean that this buy was the only one that profited for $400. We'll call it a day. So it comes down to here. So we close both of these at break even, and then we had a $400 profit on this. So let's go ahead and go back to the account. Let's calculate. So this is plus $400, which is 1980. So pretty much to the 2K target, minus spread, minus commissions and swap fees if there was any. And then we're also going to subtract the 0 that we lost, or just to really factor it out here. Let's do 1980, and we're going to add $400 from the from this profitable sell. So that's $400, but we also got to subtract the $400 from the losing sell. So, we still get 1980, but it was break even. So now we're completely, and then we can delete these pending orders up here, the pending hedge orders. We can delete all of our orders here from the chart, and we can also delete the damn support resistance zones because none of it matters anymore because you just doubled an account in a couple trades using just support and resistance and simple trade management using hedging. I teach all of this in detail in my compounding course and have for like years. And I do this live in my free Telegram channel every day. I post my analysis, which you can actually join right now by just hitting the link in the description. It does not get more simple than this. Keep things simple, control risk. That is all you need to do. And you, as a complete idiot, or for a little bit more flattering terms, as the average person, you can still make money trading. Not financial advice, and I'm not guaranteeing you anything. I don't know you. I don't know how hard you're going to work, and I don't really know your true level of intelligence. But if you have an average level of intelligence and you do the things that I've taught here, it works for me. I don't know what'll work for you, but it works for me. Hope you enjoyed this video. If you enjoyed this video, do whatever the hell you want. See ya.